Gold's price moved higher over the past week, reaching a new record high level. In today's report, we intend to lay out the main fundamental challenges ahead for the precious metal, including the negative correlation of the dollar with gold's price, as well as the upcoming release of the Fed's interest rate decision tomorrow. We will be concluding this report with a technical analysis of gold's daily chart. The negative correlation of the dollar with gold's price seems to have been in place, yet blurred somewhat. The dollar remained relatively unchanged in the last week, yet gold's price got substantial support. On the flip side, on Monday and during today's Asian session, the dollar edged lower while gold's price failed to benefit from it. A factor that may have provided support for gold's price may have been the drop of US yields both for short and long-term bonds. It's characteristic that the drop of US yields started last Thursday, while gold's price started to rise on the same day. Hence, the negative correlation of US bonds yields and gold price is in place, given also that the US bonds and gold tend to maintain an antagonistic relationship. Should US yields continue failing, it could ease the attractiveness of US bonds as safe haven trading instrument and polish the shiny metals appeal further despite being non-interest bearing. In the coming week, the main event for gold's price may be the release of the Fed's interest rate decision on Wednesday. The bank is widely expected to cut rates, and what remains to be seen is to which degree the interest rate is to be reduced. The market seems to be currently pricing in a 50 basis points rate cut, while the other 33% implies that a 25 basis points rate cut is also sufficient. The dovish expectations of the market are intense and imply that also the bank's further intentions are important for the behavior of gold's price. Should the bank actually deliver a 50 basis points rate cut as expected, we may see gold's price gaining some support, while a 25 basis points rate cut would contradict market expectations and could weigh substantially on gold's price. As for the Fed's intentions, we highlight the bank's forward guidance, the new dot plot, the bank's macroeconomic projections, and Fed Chairman Powell press conference half an hour later. Any signals contradicting the market's extensive dovish expectations could weigh on gold's price. Besides today's US retail sales and industrial output growth rates for August and the Fed's interest rate decision tomorrow, we may see other financial releases over the next days affecting gold's price. We note that on Thursday, the release of the Philly Fed Business Index for September. We note that the sister indicator, the New York Fed Manufacturing Index for the same month, indicated a substantial expansion of economic activity in the wider New York area. Should we see the Philly Fed Business Index on Thursday also implying similar expansion of economic activity, we may see gold's price slipping. Another interesting release would be the US Consumer Confidence Indicator for September next Thursday, showing a more optimistic outlook on behalf of the average US consumer. We may see it weigh on gold's price. Gold's price seems to have hit a ceiling at the 2,590 resistance line, which is new record high for the precious metals price. We intend to maintain a bullish outlook given that the upward trend line guiding gold's price since the 8th of August remains intact. We also know that the RSI indicator has reached the reading of 70, implying a strong bullish market sentiment for gold. On the flip side, the fact that the RSI indicator has reached the reading of 70 may imply that the precious metals price may be nearing overbought levels, while similar signals are sent by the price action of the bullion, which has reached the upper Bollinger Band. Should the buying interest be extended, we may see the bulls pushing the precious metals price beyond the 2,590 resistance line and set as the next possible target for gold bulls the 2,700 resistance level. For a bearish outlook, we would require gold's price action to break the 2,530 support line and start actively aiming for the 2,450 support level. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX,